Hello, fellow traders. 'Tis I, the Rumpled One. It is Thursday, October the 25th, the year 2018. Let's talk trading, techniques, tactics, and tendencies. Well, let's start off with some definitions here. If I can get the screen to do what I want to do. Tactic. It's an action or strategy carefully planned to achieve a specific end, kind of like a trading plan, right? And then we've got technique, a way of carrying out a particular task, especially the execution or performance of an artistic work or scientific procedure. Or they talk about skill or skillful, efficient way of doing or achieving something. So, techniques and tactics. Trading. I mean, we can talk about something really simple in trading, like, trading a horizontal line cross. Now, that would be a technique, right? We trade when price hits a horizontal line. But the tactic, I mean, each one of us could have a totally different tactic where we place that horizontal line, like the daily open, weekly open. If we have a bias, we could use highest open or lowest open, like a holo trade, a wick zone trade. So there's many ways to apply that technique of a horizontal line cross, and that's what gets into tactics. Now, tendencies. The thing about tendencies is they can work for us, they can work against us. I mean, as traders, what we look for is tendencies and price action on the particular instrument that we're trading. But as traders, as humans, we also have tendencies. And that's what we need to really focus on. Like, you might have a tendency to be impatient. You might have a tendency to not really follow through and do all the things you really need to do, and on and on. So you have to take a good hard look at yourself, that man in the mirror, and determine what your tendencies are, and be honest. You can't fool yourself. Might be able to fool the rest of us, but you know when you're fooling yourself, because you can't do it. It's really impossible. So, that being said, we all have different, we have money and risk management. That's a technique, but the tactics we use to implement money and risk management, what makes the difference? And I believe in a very simple tactic. We calculate our risk based on the dollars or percent we're willing to lose. And then when we look at the chart, we might determine where the stop loss should be, and then we determine our position size. Or if we're the type of trader, we just want to trade, always just trade one mini lot or one full lot or one micro lot or 10, doesn't matter the number, but we just like to trade the same position size. That's how we feel comfortable. Then we know our stop loss is going to be at a certain pip distance each and every time. On the monthly, you can see here we bounced off that low. We're now 53 pips above. We're 16 pips above that previous month's low. So if you took the cross over there, you'd be up a few pips, right? Horizontal line cross. We've got the tactic of playing the gap fill, and you can see there's one that hasn't filled. Let's just take a look and see what's going on there. We haven't filled that gap, but we surely came close, didn't we? 0.7098 to 0.70980. I mean, for all practical purposes, we got really close, but technically we didn't fill it by 2 points. So, in other words, had you traded towards that line, you wouldn't have gotten a fill, but you'd still be up, right? And back to the week, you see here, if you took the technique of trading these line crosses here, horizontal line cross, you can see here right now, if you store in a trade, you'd be 27 pips to the good. But I mean, when you add 8 to 55, you see that trade right there was worth what? We could just do it this way. 86 pips. Not bad, right? Not bad at all. And let's look here at the daily chart. You can see we exited the lower wick zone and then we exited to the south side, good for about 20 some pips, and we exited to the north side. That was also good for about what, 50 some pips. So once again, trading that horizontal line cross, that technique, you employed the tactic of doing it as wick zone trades, you'd be in the money. On the range, 1, 2, 3, 4, 5, over 100. The new beast leading the pack. Once again here, you can see we have the simple buy zone. Here's the daily open, the buy area, buy zone, the sell zone. And right here, now, the pivot was here. You see, first trade signaled short. Now, some people would say, nope, we're only going to take the long. Some people say, nope, we're just going to take either one. You see, that is the tactic. Some people are going to filter, have a bias. Some people aren't. Traders that didn't, once again, there's profit to be had here. You had a buy zone trigger here. Should have been a scratch trade, or you got stopped out here. Came the other way, made a new low, came back. That should have been a scratch. Otherwise, you stopped out. You went long here. You see, once again, should have taken a little pips. Otherwise, if you put your stop here, that was a stop out. But then entering here on this candle, as it left the zone, proved to be profitable, and you probably should have taken profit somewhere in this level. And once again, came back, almost touched the zone, took off, and then filled and hit that pivot. Not filled, but hit the pivot. So if you just put in your take profit here, you say, okay, I'm going to take profit there. That would have been a nice trade worth, about 30 pips. And you can see here, once again, short. And you can see where you should have taken profit or scratched the trade when it reversed. Because you see it had a big, big down bar. Then it started coming the other way. If you had shorted there, it's telling you something. Nice rat zone, red rat trade here. Almost a green rat trade, but not quite. Once again, we took out that pivot. You see, we took out the pivot, so we've got 3 pivots still need to be taken out. Price action, lots of price action here. As you can see, 3 ball at the bottom, green at the line long, 1 ball at the top, red at the line short, 1 ball at the bottom, green at the line long, 2 ball at the top, red at the line short, 1 ball at the bottom, waiting for a green at the line. You know, for some reason I'm having technical difficulties here. I'm not sure where the video left off, so I'm just going to go over a few things. Here we have the buy zone trade. I guess I need to pay attention to the icon down here. so I know whether or not it's recording. Sometimes I get so involved in the chart. You know what happens at the buy zone. You see we took out the pivot. Nice rat reversal here, red rats. Moving to the south side. We took out the pivot. You can see right there, again, we took out the pivot. We've got 3 open pivots for the year. Price action trading, 3 ball, green at the line right here. 1 ball at the top, red at the line. 1 ball at the bottom, green at the line. 2 ball at the top, red at the line. 1 ball at the bottom, waiting for a green at the line. And once again, more. The technique of trading horizontal line crosses, the tactics. We're using the previous daily lines, the high, open, mid, close, and low. We are trading with candle color at the line. And as you can see here, we've got some profitable trades and some scratch trades. Wick zones, once again, I mean, it's the same here, except in this case, when you trade the wick zone, you want price to enter, and then you take it on the exit. So you only go short here, and you only go long here, as opposed to here, you trade the crosses. And the holo setup, we had it highest open just a little while ago. That paid off nicely. And for those watching, once again, let me know which of these trades you guys like using, or just say, hey, you know what? I just like watching your videos, but I don't use any of your methods. I don't use your tactics. Okay, we've got the inventory reduction bars. You can see here we had a long trigger. We had a short trigger. There's a nice short trigger there. Another short trigger there, and a short trigger there. So you should have gotten either this one or this one. Otherwise, you were Johnny come lately and you didn't get many pips at all. More horizontal lines, previous daily, weekly, monthly. Favorite of mine, once again, we are taking the crossover when the direction price is moving based on H1 candle color. And you can see here we had some nice movement here. This is the valley of the ask. Obviously we crossed below the peak of the bid and we just headed down. Here we crossed above the valley of the ask, so there were some pips to be had taking that short. Okay, right here, the Einstein line. Since I opened the chart or the platform, there was a long trigger there, pretty much a scratch. Short trigger, more than made up for the loss, heading to the south side. Once again, where to take profit should have been somewhere here. You got this green candle. It just exited the wick zone there, exited that wick zone. Just take the money off the table. Okay, you missed out on about 2 or 3 pips, but you would have netted 9 pips. Not bad. Once again, you would have had the lion's share. So, fellow traders, techniques, tactics, and tendencies. Look out or be mindful of your tendencies. Try and figure out what you're doing right and what you're doing, or what I shouldn't say right, what you're doing that's profitable and what you're doing that's not profitable. Okay? Because when it's all said and done, it's not what you trade, it's how you trade it. So let's get out there and drain the banks.